What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have two high-paying dividend stocks for you guys. These are real estate investment trusts. They have excellent dividend growth. I'll do a stock analysis and quick review on these guys, and I'll do a dividend stock analysis for you guys. So my last video that I posted, you guys really wanted me to do a review on Honda and Ford stock, so I did a dividend stock analysis for you guys. And so check that one out after this video. So again, if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. And let's check these REITs out right now. I got a high yield real estate investment trust for you. EPRT is a symbol, Essential Properties Realty Trust. It's sitting at 2147. Dividend yield is 5.03%. PE ratio is 24.49. Average volume is 920.74K. Market cap is 2.82 billion US dollars. It's not too bad against the S&P. It was beating it, then it was in line, then it's so-so. Year range is 1973 to 3292, major dip. Day range is 2126 to 2155, and its previous close is 2131. So what do I like about these guys? They invest in triple net lease properties across the U.S. Essential Properties acquires, owns, and manages primarily single-tenant properties leased to middle-market companies operating in a service-oriented and experience-based businesses. All right, so that's pretty good. Kind of reminds me of Store, NNN, Agree Realty Corporation, and Realty Income a little bit. So here's just some featured properties they have is Taco Bell. Ohio, they have 44. Texas, they have 83 properties. California, they have 2. Alaska, they have 2. Florida, they have 46. Missouri, they have 12. New York, they have 32. Even in Maine, they have 1. Another one I found is Illinois, Wisconsin. So they're pretty well diversified. Nevada, they have 1. New Mexico, they have 18. Arizona, they have 14. Oklahoma, they have 10. So they're pretty well diversified. Let's check. South Carolina, 16. Georgia, 87. That's a lot. Holy cow. And North Carolina, they have 14. Virginia, they have 5. So they're pretty big. They're a little diversified. And I'm going to go over their revenue and their dividend history. So these are kind of a new kid on the block a little bit. 2016, this is in millions US dollars, 1552, 2017, 5449, 2018, 96, 22, 2019, 139, 35, 2020, 164, and then 2021, 230. So there is excellent revenue and growth with these guys, which make them very attractive. And again, they're kind of new, and they're not even $30. So these guys are definitely on my radar. Will I add them on M1 Finance? It is a little bit of a consideration to add these guys because I do like the diversification. And, you know, again, this is not financial advice for entertainment purposes, only disclaimer in the description. But EPRT, I know I'm going to repeat this a lot because a lot of you guys are driving, and I guess there are some issues with symbols, and I will have that in the description after this video. But these guys are new. They appear to have some job security and building security during a pandemic or recession. And the revenue has jumped up even during the pandemic, which makes these guys very attractive. Now let's jump to their dividend history. Let's start in 2019, 21 cents. Then 2020, 23 cents. Then 2021, 24 cents. Then 2021, 25 cents. And then 26 cents, and then 27 cents. So their payout ratio is 73%. Number of dividend increases in the last 5 years is 7. Annualized dividend growth in 5 years is 5.96%. So if you bought 1 share, you made $1.04 with a 4.88% dividend yield according to Zacks. So here's the thing. Now the dividend growth is a little slow, 5.96%, but you have a little bit more let's just say security, it appears. Now again, I'm not giving financial advice, but just looking at these guys and what they own, if a pandemic or recession happens, these guys appear to be in good shape, and they're just getting bigger as a company, and they're expanding like crazy. So that's one thing to take into consideration. These guys are new, and they're growing, and the revenue's slowly going up, and their dividend hikes are slowly going up. So that's one thing that's attractive with these guys. I'm going to go over one more thing. Essential Properties Trust increases 2021 AFFO per share guidance to 124 to 128 per share and raises second quarter dividend 25 cents per share with a 4.2 increase over the quarter. So they are doing pretty good. Again, I'm not a financial analyst, not giving financial advice, but I like the way things are going. And these guys are new. I would still consider them a little new. So with the diversity of their portfolio, they're in pretty good shape versus like EPR properties. Like when the pandemic hit, EPR properties took a huge hit. And I told you guys, that's why I'm buying the dip, because eventually they will return their dividend. I don't know if they'll get back to 37 cents in a year or two, but they're slowly getting back to where they were because of the pandemic. But these guys have some pretty strong defense if something happens. They have a little bit more security than a stock like EPR properties. Now let's jump to the next dividend stock. And here's a dividend stock that took a little bit of a hit during the pandemic, and they're not doing too well against the S&P, which makes these guys attractive. Alexandria Real Estate Equities, ARE is a symbol. Dividend yield is 3.35%. PE ratio 51.28. Average volume 1.25 million US dollars. The market cap is 23.02 billion. The year range is 130 to 224.95. Day range is 138.79 to 142.50. Previous close is 137.95. What do I like about these guys? And again, ARE is a symbol. So look at this. With real estate, they're a little diversified. They own, operate, and develop collaborative life science, AG tech, and technology campuses in the top urban innovation clusters of North America. So that's one thing, a little bit of diversification that they have. There's a little bit more to these guys that make them very attractive. So look at their facilities in the world's best clusters, strategic locations where the key building blocks of innovation thrive. Our collaborative life science, AG tech, and technology campuses powerfully complement the cutting-edge scientific and managerial talent, smart capital, and world-renowned academic and medical institutions in these locations, providing our tenants with a dynamic ecosystem to accelerate discovery and communication. So let's check this out. Research triangle. Okay, let's just click Greater Boston for an example. So they have, look at this, Massachusetts Institute of Technology, New York, Alexandria Center for Life Science. Look at this. And let's do the research triangle. So Alexandria Center for AG Tech, Alexandria Center for Advanced Technologies. So they got a lot of these cities, and I'm going to click one more. So Fred Hutchinson Cancer Research Center. Now these guys are well known. These are really cool places that do research, and guess what? They're paying rent, and they got to pay their landlord. So I find it very interesting. There's a lot of security with these guys. Life science and science, I mean, it's always going to be in demand, and people need property to do their research, so they got to pay landlords. So that's what happens. These guys are well diversified. Now let's check out their revenue and their dividend history. Look at this revenue these guys have generated. 2015, this is in millions of US dollars, 843, 2016, 921, 2017, 1,128, 2018, 1,327, 2019, 1,531, 2020, 1,885, and then 2021, 2,114. So their revenue has jumped up like crazy from 2015 to 2021. So there's always going to be a demand of science and research, and these guys are well diversified, and this is what makes these guys very interesting within the medical community and a real estate investment trust. This is a very popular real estate investment trust that people really enjoy buying and owning, because I'm going to show you its dividend history and you're going to be like, wow. And the thing is, these guys never put on the brakes. So look at 2012. 49 cents, then 51 cents, then 53 cents, then 56 cents, and then 60 cents in 2013, then 65, then 68, then 70, then 72, then 74 in 2015, then 77. Look at this dividend growth. 2016, 80 cents, and it goes up 83 cents, then 86 cents, then 90 cents, then 93 cents in 2019. 2018, then 97 cents in 2019. Then 2019, they reach $1. Then 2020, 103. then 106, then 109, and then they're at 112 and 118. So they have a 3.33% dividend yield. If you bought one share, you made $4.60. Number of dividend increases in the last 5 years is 11. The payout ratio is 58%. Annualized dividend growth in 5 years is 6.50%. That's not bad, but my gosh, those dividend hikes over time, these guys are just racking up the cash. And again, remember, a real estate investment trust, 90% of what they make have to go back to investors. They have to pay a real big penalty. So that's the one benefit of a real estate investment trust. Like, the thing is, I can't do real estate right now. My own real estate. I'm busy. I'm in graduate school. I have a lot of things to do. That's why I invest in Fundrise. And by the way, there's a special in Fundrise. If you click my affiliate link, you get $50 for signing up. So check that out. It's in the description. I own Fundrise. I'm long in it. I put $10,000 in 2018, and I've been putting money in since. And I like my returns. I'll probably do a video with you guys on Fundrise and the way things are going. And I will not post a video on Saturday, but I wanted to post this video for you guys to check out these two real estate investment trusts that are pretty good dividend growth stocks as well. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe. And again, hit that notification bell so you don't miss future videos. I am posting videos. I am very busy, but I will be posting videos. So you have to hit that notification bell so you don't miss future videos. Take care and have a good Friday.